Last week, Wall Street had its worst performing day of the year on Tuesday when the S&P 500 and the Nasdaq were down 1.6% and 2% respectively. Now, markets steadied a tad with the FOMC meeting minutes, but still, the more robust inflationary data across the board in February has traders understandably concerned over another wave higher in prices and therefore the measures needed to combat this. Hello, I'm Connor Woods, market analyst at ForexSignals and howtotrade.com. Here is our weekly preview for week 9 in the financial markets.
Can you believe it's already the final trading week of February? It seems like just yesterday we opened the book on 2023, and now we're in the 9th trading week of the year. We're going to start this week off with a big economic event, core durable goods out of the United States. Very rare to have something this big scheduled for a Monday, specifically in the States. Doesn't happen very often, but this week we have that. Durable goods is due to come in at negative 2.1%, down from 5.6% month over month. This is a big time move and suggests that maybe that global recessionary narrative, or at least a localized U.S. recession, may be in the cards. Now, to really capitalize on this type of release, we need to be looking at the proper market, and the proper market is going to be the U.S. 30. We're going to be looking at U.S. equities. We like the U.S. 30 with our monthly time frame. This week, we're looking at monthlies. Why? End of the month and the beginning of the new month. So we want to know where our long-term anchor points are so we can trade them, if not at the end of February, but in early March. And you can see right here, we've got a nice Fibonacci retracement off of let's see, October's lows, and we go right there to December's highs, and we have a nice 38% at 32.5. We think that that's a nice level. It could be a nice support level if we do get a retracement there, maybe even to open March. We have a potential buying opportunity set up there. So for Monday, it's durable goods and it's the US 30. US equities should be on fire, should be a key event. Now for Tuesday's session, we've got some GDP news out of Canada. Now, along that contraction, that economic contraction theme, we've got GDP is supposed to fall in Canada to 1.5% for Q4, down from 2.9% in Q3, so almost half of the value, and really sort of suggests that some of those rate hikes, that early hawkish attitude in 2022 from the BOC is really starting to bite and maybe shrink that economic output just a little bit. We're going to be looking at the CAD yen. There's a lot going on in the yen as well. We've got a new BOJ governor. We've got all sorts of testimony in front of Parliament from the new UEDA, the new BOJ governor. Late last week brought a lot of participation to the Japanese yen. We think that there's a possibility here maybe to get a trade or two off in the CAD yen. So really a nice, we've got a double top up here from last fall, and we came right down to this spike low in January, our yearly low for 2023, and we're trading right at a key level, our EMA right there at 99.50, and we've also got 38% up there at 169. So I'm looking at 150, 175 to be a nice area potentially for a short. Now, midweek trade, Wednesday, midweek trade gets underway with a key event out of Australia. Now, along that GDP theme, we're going with Australian GDP to be our key event there for midweek trade. And we, that global narrative, I mean, we're saying recession a lot because that is the big question. Can the Fed, can global interest rates go high enough to check inflation without causing that recession? Right now, we just don't know. Most analysts are on the fence, and so there's a lot of indecision out there. So we're going to be looking here at the Great Britain pound, Australian dollar. And the reason why is this market is in fairly deep consolidation for the past 4 months. Now, can this GDP number shake us out of this slumber? Well, potentially. We're looking at Australian GDP for Q4. We're looking for this to rise. This is supposed to be a positive number. We're looking for 6.2% over 5.9 year over year, and quarterly for Q4, 0.7 over 0.6% previously. So we're looking for a nice number, and if we don't get it, that could really bring some volatility here to the Aussie. So just looking at this pound Aussie, you'll notice that we don't always have to have great, big, wide open ranges to trade. Sometimes we just have to get a little more creative with our time frame, and you'll see our monthly very choppy there. Let's go right down to a weekly. Let's dial this chart, dial our periodicity down, and look to develop a wave that may work for us. Now, looking at this weekly, it's not a whole lot to look at. You can still see very tight. There's a doji. There's almost another doji. Very tight action there for about 3 weeks in a row. A little bit of a bullish break last week. Let's just work some Fibonacci's from this spike low. low all the way up to last week's high. And you'll notice that anytime we manipulate a chart, it means that the market conditions are flat. We'll take a look at what we have here. 38%, maybe not so good this time, 175.51. That's more of a trend play. I'm looking for a deep rotation, maybe a deep pullback somewhere down there around 74, 174 and a quarter. Even though that's 200 pips down the chain, it could definitely happen if this GDP number comes in, maybe surprises the experts. All right, now Thursday, late week trade gets underway with inflation data, and inflation data is always key. This time it's out of the EU, and we're looking for EU CPI. It's slated for release on a year-over-year basis. CPI is to rise from 8.6% to 9.0%, nearly a half a point. This is a big deal. I mean, we pretty much understand that inflation's going up. We just think that perhaps some of these rate hikes have checked inflation, at least in the short term, and the proof's in the pudding. If these CPI numbers continually come in hot from the US, from the UK, from the EU, you're going to see some major rebalancing of interest rate expectations. So this is a key release. Anytime you see anything that has to do with inflation on your economic calendar, circle it, be ready for volatility. Now, as far as what we're looking at here on the euro, this is pretty good stuff in a lot of ways. You've got a nice yearly range. There's your February high of 2022 all the way down to the September low. And what you can see right here, just a quick and dirty Fibonacci, is what do you have there? You got a nice big baggy retracement, but we couldn't sustain trade above 62%. So at least theoretically, we're going to attack this range in the belief that perhaps we're headed lower. At least that's what our technicals tell us. Now, maybe we are, maybe we aren't, but what you can see right here, you've got a nice run up. This is the new wave, and this is the one we want to focus on. The key to this technical analysis is staying absolutely as current as you possibly can. I'm a firm believer of staying current with the Fibonacci's, and you can see we've got a nice support zone coming into play. So right there, 104.64. We're still a little bit off the lead lap there, but this CPI number, along with those other economic metrics coming out next week, could definitely drive us down there. So right around 104.75 to 104.50. That's a nice little zone that we can step up and maybe be looking to build an accumulation trade or alongside type of a position. Now the week wraps up with a relatively quiet economic calendar. We're looking at the ISM non-manufacturing index out of the United States. Now typically it's listed as a market mover. I wouldn't hold my breath too much on that. I think that that may be more hype than anything. But what we should be looking at after a big week of economic events, and then the following week we've got NFP coming up on that second Friday of March. It's going to be typically it's the first Friday. This time it's the second Friday. But going into that kind of a news cycle, we could see some rebalancing in the gold market. We could see some participation, some institutions perhaps, or in big time traders or even retail traders, take some risk off the board. Maybe they'll be looking to get into something like gold going into that weekend news cycle. You can see right here monthly, we've definitely sort of compressed since there's the Russian invasion of Ukraine, triple bottom last fall. And what do you have here? You sort of have something that doesn't necessarily resemble the biggest trend we've ever seen, but it's a nice 3-month move. Here's your pullback, and right now we're trading at a very key level, right around that 1827 level. So we're going to be watching these retracements very closely. The other thing to watch right here is we have a Bollinger Band, 1804, and we have a crossover there with our EMA right there at 1804 as well. So a crossover could signal either flat conditions or a change in the prevailing trend. In this case, I wouldn't really consider this a trend, but it's definitely a move, definitely a bullish move. And if we see this crossover, perhaps this will suggest a little more bearish action. We'll be looking at something like 1744, 1786. But moreover, right away, we're going to be looking at that 18.25 level all week long. So we've got a big 5 days on the market. We've got some key events. We're going to kick March trade off in style. Be sure to join us in the trading room. Watch for our live squawk feature and check out, post your trade ideas, live community trade ideas breakdown. Feel free to join us for a few sessions and we'll unpack the price action and the key events and the fundamentals as they happen in real time.
So with a tempting mix of US PMIs, consumer confidence, Australian inflation and more, we have plenty of opportunities to explore this week. There are also numerous questions that need answering, such as whether this truly is the peak in inflation, or is there a period of stagflation on the way? As always, our team of analysts will help guide you through these opportunities every single day in the trading room, ensuring a high quality service. We'll help you make the most informed trading decisions and, as always, be with you every single step of the way. Until then, trade well, and we'll see you on our next live stream.